Ripple just quietly did something that JPMorgan, Mastercard, and one of the biggest asset managers on Wall Street have never done with any other crypto token, and almost nobody covered it properly. While you were watching the XRP price sit near $1 and change, doing basically nothing for months, Ripple was busy building something in the background that could completely change the entire story. Today we are breaking down the real disconnect happening right now between Ripple the company and XRP the token, and why understanding this gap might be the single most important thing for you to know before the next major move. Let's start with the headline event that should have sent XRP flying. Ripple, working directly with JPMorgan, Mastercard, and Ondo Finance, settled the redemption of a tokenized United States Treasury fund across borders and across banks, using the XRP ledger. The blockchain leg of that transaction finalized in under 5 seconds. Compare that to the traditional banking system, where the same redemption takes anywhere from 1 to 3 full business days. This is not a demo. This is not a white paper promise. This actually happened, live, with some of the largest financial institutions on the planet. For years, tokenization was mostly private chain experiments and marketing slides. This was different. This connected one of the biggest settlement institutions in the world to a public blockchain, outside of normal banking hours, and it worked in seconds. As a proof of concept for real-world asset settlement, this is about as strong as it gets in the entire crypto industry. So here's the question that should be bothering every single XRP holder watching this video. If this is such a massive win, why did XRP barely react? Why is it still trading in the same narrow band it has been stuck in most of this year? Why did an earlier version of this exact same pilot actually cause XRP to fall nearly 5% on the day it was announced? This is not a one-time fluke. This is a pattern that has defined XRP through this entire year. Ripple keeps stacking up institutional wins, and the token keeps trading like none of it matters. And the reason why is something almost nobody explains properly. Here is the uncomfortable truth. The JPMorgan Treasury settlement used Ripple's own stablecoin, RLUSD, as the cash leg of the transaction, not XRP. Ripple equity and XRP are two completely separate assets with two completely different value drivers. XRP needs real, direct token demand to break out of its current range, and settlement volume flowing through RLUSD does not automatically translate into people needing to buy and hold XRP itself. This is the exact same trap that is happening with the biggest speculation cycle in the entire XRP community right now, the Ripple IPO story. Let's break this down properly because most channels are getting this completely wrong. Ripple's private share price has surged to $136.90, up 376% all time, after a spring share buyback fixed the company's valuation at $50 billion, a jump of 25% above its previous funding round just months earlier. Institutional investors are actively pricing in a potential public debut. Ripple has been ranked as the 9th largest IPO candidate in the world at that $50 billion valuation, putting it in the same league as companies like Canva. If Ripple goes public at that valuation, some analysts believe XRP could push toward the $3 to $5 range, as institutional attention spills over from the equity story into the token. Standard Chartered has even floated a target as high as $8 for XRP this year, under favorable conditions with steady ETF inflows. But here's what almost every hyped-up video on this topic conveniently leaves out. XRP is a digital token that trades on public exchanges. It confers absolutely no ownership of Ripple the company. No shares, no dividends, no claim on the company's profits, ever. If Ripple lists on the stock market tomorrow, an XRP holder owns exactly what they owned the day before, a token, not a piece of the business. And Ripple's own leadership keeps saying again and again that an IPO is not even a priority right now. Ripple's president has directly stated the company has no plans for a public offering and can keep funding its growth internally. The chief executive has echoed this, saying Ripple has not needed to raise capital because of its strong financial position. This speculation is being driven entirely by secondary market share prices and buybacks, not by any actual filing with regulators. So why does the price keep climbing on private markets if leadership keeps denying it? Because Ripple has spent nearly $4 billion on acquisitions in the past year alone, including major deals like Hidden Road and Treasury, and investors are betting that all of this activity is building towards something. Whether that something is an IPO next year or in several years remains genuinely unknown. Now here is the part of this story that most content creators are missing entirely, and it might actually be more important than the IPO speculation itself. XRP holders are finding a completely different route into public markets, one that does not require Ripple to go public at all. A company called Evernorth Holdings is going public through a merger with a special purpose acquisition company listing on the Nasdaq stock exchange. This deal is raising over $1 billion in gross proceeds, and the entire purpose of that capital is to purchase XRP directly on the open market and build what would become the largest public XRP treasury company in the world. This is not a passive fund sitting on a pile of tokens. Evernorth plans to actively grow its XRP holdings through institutional lending, liquidity provisioning, and decentralized finance strategies. And look at who is backing this. Ripple itself, alongside SBI Holdings committing $200 million, Pantera Capital, Kraken, and GSR are all investing in this launch. A longtime senior Ripple executive is running it as chief executive, while Ripple's own leadership is acting as strategic advisors behind the scenes. For any institutional investor in the United States or United Kingdom who cannot legally hold crypto directly due to regulatory or custodial restrictions, this Nasdaq-listed vehicle offers direct-indirect exposure to XRP's performance without needing a wallet, without managing private keys, and without touching a crypto exchange at all. This is a genuinely new and underappreciated pathway for XRP demand to grow, and it exists completely separately from whether Ripple itself ever decides to go public. So let's pull all of this together into what actually matters for you as an XRP holder or someone considering buying in. The Ripple corporate story is objectively strong right now. Institutional partnerships with names like JPMorgan and Mastercard, a $50 billion valuation climbing rapidly on private markets, billions spent on strategic acquisitions, a dedicated publicly listed vehicle being built specifically to buy and hold XRP at scale. But none of that is the same thing as direct XRP demand, and the market has proven this year, again and again, that it knows the difference. The lesson here is not to ignore these developments. The lesson is to stop treating every Ripple corporate headline as an automatic reason for the XRP price to explode. The real catalysts that move this token are still the ones tied directly to XRP itself, whether the Clarity Act actually passes and legally locks in its commodity status, whether spot XRP ETF inflows keep compounding instead of stalling out, whether real settlement usage on the XRP ledger translates into genuine token demand against the enormous escrow supply still sitting in Ripple's control, and whether Bitcoin and the broader market give XRP room to breathe. Ripple the company is quietly becoming one of the most important infrastructure players in all of traditional finance. XRP the token is still waiting for the market to fully connect those dots into real sustained buying pressure. That gap between the corporate story and the token price is exactly where the opportunity and the risk is sitting right now. Watch the Evernorth Nasdaq listing closely. Watch whether Ripple ever actually files for its own IPO, and watch whether the next JPMorgan style announcement finally moves the XRP price instead of getting shrugged off again.